Well, we've definitely in the last month or so seen buyers taking more of a wait and see approach. We've seen that prices for homes have started to come down, inventories incrementally rising along with rates, and it seems like buyers are taking time digesting all of those moves, and really just there's a lack of urgency in the market.
And so for the home builders themselves, is there also a factor of these rising input costs, that materials are more expensive? There's the trade tension and not knowing how much you're going to pay for steel, aluminum, and timber?
Yeah, I mean, the builders have definitely been facing inflation. More recently, we've actually seen some of their commodity prices coming off, especially lumber. But that being said, wage inflation remains an issue, especially given a lot of the labor constraints that we're seeing amongst a lot of their subcontractors. And that's something that we think will continue, actually.
And we were just talking with the portfolio managers about the emerging markets. But, we keep hearing in a lot of different sectors about the damage or the threat from China's economy slowing. Is that part of what we're seeing here? We had an awful lot of Asian buyers coming into the housing market in the United States.
Yeah, we're definitely seeing foreign buyers pulling back, especially on the coast, California being one of the really big markets. Part of that is coming from that slowdown that we are seeing internationally. They're just not buying at the same clip in the U.S. The other thing, too, is that as U.S. immigration policy tightens, there's less, certainty around visas and things like that being extended. And so that buyer is just not quite as confident on their future. And that's certainly coming through in the housing market.
Susan, I was reading the Home Depot downgrade this morning that came out from Bank of America Merrill Lynch, and they're citing a couple of troubling factors for this industry. Number one, that home sales likely peaked in 2017, and home price deceleration will accelerate in 2019. If that's the case, what would the catalyst be for the sector, given we've already seen a raft of warnings from not just the home builders, but also the building suppliers?
Yeah, I mean, look, we are seeing macro tailwinds that are coming in that remain supportive. You continue to have, very tight unemployment numbers. You continue to have broader GDP growth. And so, I think the average consumer out there is feeling pretty good about their forward outlook, and consumer confidence certainly remains high. So that could be something that certainly helps us, especially as we get into the spring selling season. I think everybody is sort of waiting until we get past the holidays. Seasonally, this is a very time of year for home sales. We're going to have to sort of wait until we get into the beginning parts of 19 to see how the consumer is feeling in regards to a lot of the issues that are hanging out there. But there certainly is broader macro support for housing growth next year.
And Susan, you anticipate seeing resilient remodeling activity. Is that good news for like Black & Decker, for instance?
Yeah, that definitely is good news for those companies. We think that there's a lot of people that are locked into legacy, lower rate mortgages, and yet, home equity is positive. As I said, they're certainly feeling pretty good about their personal balance sheets. And so we do think that that gives them the support to take on bigger ticket projects, going forward. That will help companies like Stanley, Black & Decker, Fortune Brands. Those are two of our preferred names out there, just given that fundamental activity we expect.